Welcome back to Know Your Numbers. This is topic number 1, which covers revenue. Carol and I will discuss what it is and make some recommendations about how to think differently about it. We'll talk about various revenue models and some ideas about how you might grow it. We will also briefly cover pricing and its impact on both revenue and profits. So welcome back, Carol, and this is an important topic to start the series with.
Yes, it is. One thing I know from being an accountant is this: everyone has the goal to make as much revenue as possible. However, what seems to be such a simple concept, the art of making money, can be so elusive and intangible at times. So my goal, along with you, is to erase the struggle and coach the owner to profitability. So what do you say, Ross?
That's great, Carol. I'm with you on that, and take it away.
Okay, great. All right, let's dig into revenues. Revenue. What is revenue? Revenue is the capture of all monies that the company has earned from product sales, service fees collected, etc. Layman terms for revenue are top line, total income, total revenues. But let's talk about what it is not, because that's equally as important. It is not intercompany transfers. It is not money that you invest into the company. It is not money that you receive from loan proceeds. It may include grants, but check with your tax advisor about that to determine if it is or not. And also, lastly, and most importantly, it does not show profitability of the company. One thing I wanted to point out is where it's located on the financial statement. As you can see from our slide of the profit and loss, it's the top area of the profit and loss statement. And it's in here we have income, and income is listed as 3 different products, product 1, 2, and 3. So where do you get this information for revenue? Well, practically speaking, it's the deposits to your bank account. Sounds simple, right? Well, it is simple if the deposits are only from company sales. A common error that I see is the commingling of business owner personal transactions with the business. My word of advice here, don't do it. Have a separate personal and business bank account. It gets too confusing at the end of the year to figure out where the monies came from, and if it was personal or business or not. Start with a clean slate of only business transactions. That is the foundation of knowing your number. So, okay, Ross, now that I've spoken about the definition of revenue, why don't you tell us about revenue drivers?
Okay, so that said, here's something to think about. What is driving revenue in your business? In our work, we often approach that question as follows: who is buying what, how much, and how often? Who is buying what speaks directly to the very important concept of who is my target market or customer segment, and what problem does my solution or value proposition solve, improve, or in some way satisfy? Next is the question, how much? What can I do to increase or add revenue to each individual sale? We'll talk about some possibilities shortly. And finally, how often? Are your solutions for your target markets conducive to creating recurring revenue, or are they primarily geared towards single, infrequent transactions? Your answers to these questions may prompt you to take a look at a change in your revenue model. Now we'll take a look at some different revenue models. 2 of these, fee for service and fee for product, for lack of a better term, are 2 of the most common ones you'll see out there, and they can work well, but is there a way to make changes to provide other opportunities to increase sales and profits? One example is product revenue. Vehicles, both light and heavy equipment, tools, tents, and more can be offered to customers under a rental arrangement, which is significantly less expensive to them than buying them. Is there a way to incorporate this model into what you're currently offering? Another model is the subscription model. Netflix and Amazon are 2 high-profile examples of how well that can work. Today, you can buy almost anything from dog food to software to razor blades using this model. It provides predictable, recurring sales, profits, and cash flow to these companies. Now, obviously, you are much different than these companies and don't operate on the same scale as these folks. But what I'm suggesting is that you constantly take a hard look at what you are doing, research some other models, and try to incorporate something new and different into your mix. Carol will now lead a discussion on why a business owner needs to look deeper than the total revenue or total income line item, and then offer some things to consider on starting to grow sales profitably.
Okay. So after you've identified the model or models that represent your company, how do you track it? After all, you can't succeed at growing something if you don't have a baseline measurement to start with. I would encourage you to break this area out and be thoughtful about this. For example, if you have products, break your revenue into types of products. For example, product one could for a coffee shop would be beverages, product two could be baked items, product three could be merchandise. Say you have a service industry, you could break the revenue into different types of services offered. Product one, well, like let's take a contractor, for example. Product one could be renovations, product two could be installs, product three could be new builds. I think you're getting the point. Use practical caution here. Think of how customers can be identified or services that you provide can be identified. Don't make this area too large. The revenue needs to be meaningful so you can compare how you're doing year to year, quarter to quarter, month to month. This will help you to begin how to determine how well each item is selling. But remember, it does not mean that it is profitable. Do not confuse total revenues with profitability. Remember, top line, total income is for show, bottom line is for dough. There are costs associated with the sale of a product and they need to be assigned to a product. But I'm getting ahead of myself, and let's not do that too much. Next, let's look at how do we grow our sales. So now that we have identified how to measure revenue, how do we grow them? Your company already has a customer base. Why not use them to increase your sales? Things to think about. Are there new or related lines of business that can be added to your current offering? Think of items that complement what you already have. For example, a landscaping company, if you have one, you might consider offering snow plowing because you already have the equipment to do the work and the customer base is already established. For a bookkeeper, you could add on tax preparation services, or you could offer administrative services or a payroll service. Number two, are you effectively generating revenues from add-on sales? Are there items that can be added to a sale that will increase the total amount of a sale? Think about this. Do you already offer a service for free and don't charge for it? Perhaps you can break it down and offer it to a client a la carte. For example, maybe you have a bakery. Maybe you might think about offering take-home batter, dough, mixes, other items that the total sale would help increase the total sale. So remember, the goal here is to increase your sales with your current customer base by offering an item at the time of checkout. And then number three, is it priced correctly? Are you in line with your competitors? Perhaps you should start doing your own market research to determine what others charge. Call your competitors and ask them. It might be scary, but you'd be amazed at how much information you would get. The topic of pricing is so important that Ross is going to walk us through it in more detail.
Thanks, Carol. Proper pricing is one of the most significant barriers to profitability I run into as an advisor. They simply aren't capturing full value for what they offer for a number of reasons. Concerns about being competitive in the marketplace, not knowing how much it costs to provide their product or service, or a desire to make it affordable to everyone are just a few of the issues. My colleagues and I at Vermont Small Business Development Center could offer even more in that department, but I hope the point I'm making is clear. Pricing for profit matters if you want to be successful. Now let's take a look at a simple pricing exercise I went through on a 20-minute call after I happened to pick up the phone and found a very frustrated business owner on the other end of the line. Okay, as you'll see on the slide here, the young lady and her partner were offering mountain bike tours. And the issue was, as she put it, I can't make any money. Now, she was offering the service and at an $89 price point. So the first thing we started with in terms of getting to the root of the problem is, did you consider how much profit you were going to make at the end of the tour? And she said, do you mean our salary or our wages? And I said, no. How much do you want to have left over after you pay all expenses, including your owner's salary? She thought about it for a second and said, well, 10,000 seems like it would be good. So we put that down on the pad. From there, we went through the rest of the line items. How much did you spend on marketing? What were the food and beverage costs? She offered lodging, so how much did she have to spend to house the 200 participants that she sold to? And there were a number of other miscellaneous expenses that came to a couple of $1,000s. The next question was, all right, we've talked about your profit. How much salary do you feel you should be able to draw for the work you're doing? She thought about it for a second and said, well, I think between the two of us, $10,000 for a couple of months' work ought to be reasonable. I said, great. So we put that number in and we did the math. Okay. So the total cost and profit for the entire project or the entire tour here came to $38,500. So as I said earlier, she had 200 participants here and she had no trouble selling them. So at the end of the day, the cost per participant here came to $193. So I suggested she try to price it to reach her goals at $199. Now, one thing that's very important here to note is this price point appropriate for the target market she's trying to reach? And here the answer was a resounding yes. The demographics of this particular group of mountain bikers, many of which come from across the border up in Canada, was very much upper middle and higher income earners. And they thought nothing of spending $199 for a weekend bike tour and everything that went along with it. In fact, a number of those bikers in the past had told her they thought she wasn't charging enough. So that's just one example of how you might put together and think about your pricing as you take a look at your own. It won't fit for everyone, but in this particular case, it was a simple exercise and got her where she needed to go. Okay, so Carol, we covered a lot of territory there. What would you say that, based on your experience, what we covered here is a key takeaway for our folks that were listening in?
Key takeaway from my point of view would be the measurement of the revenue models. Once you've decided on what they are, establishing that foundation and baseline will lead to greater analysis of your products that you offer and thus greater insight after you make decisions. What do you think, Ross?
Well, I like the point you made in your slide about the add-on sales. In my experience, that's a lot of low-hanging fruit there that simply isn't taken advantage of enough. We've all been to a restaurant where the waitress casually offers, would you like some dessert? Instead of making a concerted effort to talk about the dessert and why you might want to purchase it and why it's, so simply adding on sales like that can simply increase your sales by 10% almost without even trying. So it's a quick and easy way to add sales and possibly even higher margin products to your sales. So that's what I would take away from this if I were watching. Okay, so next topic coming up is expenses, and we will take a little bit of a deeper dive into that in our next session. Hope you'll join us.